Welcome to the Family Office Sherpa podcast. I'm your host, Shaun Parkin, founder and managing director of Whole Road Investments. The aim of this podcast is to provide practical and implementable advice for those looking to build, manage, or service a family office. This is not, however, investment advice, so please check the disclaimer in the show notes. For anyone interested in the Whole Road platform and looking for services, fees, and engagement types, then please check me out on LinkedIn. In this episode, I'm going to dig into how AI models are being used for investment reporting.
This is the Family Office Sherpa.
So what was the catalyst for this one? I would say that I've had more conversations in the last 6 months with either new firms bringing on AI tools that can be used or that purport to be used for investment reporting, but also reporting across other components of the family office. And also I'm getting a lot of questions from family offices themselves, both clients and contacts, around the question, do we really need a specific reporting solution, or can we name your AI model? AI, Claude seems to be the one that most people are using. ChatGPT, some version of that, right? And so I thought it might be a good idea, and hopefully this doesn't age the podcast too badly, but a good idea to sort of get an understanding of how we frame reporting and what, investment reporting in particular, because it is a big part of the investment governance piece and the work we do at Whole Road with clients. And B, where this potentially might head so we can use the current technology, but also with an eye to sort of going, well, what's coming down the pipe, right? The challenge with that last bit is it does create this idea that we can't do anything because it changes so quickly. But as we know, you got to do something. So I guess this is where and this is one of the points that I'll make later on in the show, which is what can we do now, and how can we circumvent some of that potential obsolescence, right? So, like I said, having a lot of conversations at the moment around this, and I think we should start with the start, which is, what are we looking for from investment reporting, or why do we look for a solution here where most people continue to use or start using Excel? So what we're looking at here is, how can we aggregate the data across all our custodians? Because very rarely is a single family office a client of a full custodian. They're very rarely like an asset owner, like an institutional or a pension fund, where you'll go, all our assets are held with a single custodian, and then they're held there, and we can get access to all the information we need because it's essentially held. No, it's not the case. Nearly every single family office, and honestly, most family offices are quite comfortable with this, is the fact that they use counterparties like asset managers, wealth managers, private banks, fund managers, all sorts of different things that have their own custodial reporting structure, and we're trying to get the data out of them and into our own. Now, it makes sense, right? As soon as you start buying stock, I'm buying one share for this amount, and I can put it in Excel. I can start tracking it. We're sort of tracking investments now. I might start up a second sheet called, private investments, and this is where I'll put all my private equity and private credit and things like that. I'm going to have to start another sheet, and that new sheet is all our direct investments. I'm going to have to start another sheet. You know where I'm going, right? So it ends up becoming quite convoluted. You end up having a lot of people touch data. It's very key person risk, because if someone gets hit by a bus, then probably might not even have the login, might not know where it's stored, all sorts of things. I've said in the past, what Excel reporting on the investment side does is it creates the most customized version of it, right? And you don't want that. You don't want something that is so specific to an individual or a part of the office that no one else would, without them, you're cactus, right? So what do we think about when we come to reporting? What is the investment? What are we actually trying to report on? What is if it's for the investment team, Do they need a portfolio management system plus an investment book of record? And when I say investment book of record, I mean just getting the data down and somewhere and accurate and accessible. And when I say portfolio management system, does it need to have the piping associated with it? Does it have straight through processing for our equity trades? Does it have, all these sorts of things? Does it set up with our panel? All these sorts of discussions. I would say that 99% of the offices I work with don't have a portfolio management system requirement. There are a few out there that I've talked to and know, and they're a little bit more like a fund manager, really. They might use something like interactive brokers for execution and things like that. And if you listen to the Craig Dandran's recent interview that I did, he mentions that they do execute through their own, they can do self-directed execution. But a lot of them don't tend to have portfolio management requirements. They might just call or email the advisor or the private bank or something like that and go, please execute this trade, blah, blah, blah. And then it's more about the downstream impact of that trade. Like, how are we capturing it? How is it settled? What are we doing from a performance perspective? And that's more investment book of record. So I'd say that that's more aligned to what most are. The other thing to consider here is what's the push and pull from the counterparties? Like I said, if you're transacting through private bank A, how hard is it to get that data to us? How often does it come? If there's, you do have quite, simple cloud-based retail style platforms that the contract note can be ingested into that quite easily, just at the same time the transaction is done. So it really is all these sort of nuances around sort of how the data comes to us and how do we push that data back to our stakeholders, right? Are we getting someone else to do it for us? Private bank, wealth manager, a firm that's tasked specifically with that, or are we doing it ourselves? Also importantly, and this is where it comes, we're getting down into the sort of the nitty-gritty here a little bit, but where is the data being stored? So if you're on Excel and it sits within your 365 instance, but if you sit it on a platform, then it sits within their server, like how accessible is it? What's the counterparty risk look like? And how much access do they get to our data? And also data being stored means that you have to either push it somewhere if it's if it's a platform that sits outside of the office, and if it's internal, then we have to bring the visualization to us, right? Reconciliation of that data. I know this is not super interesting for everybody, but you want clean, accurate data. You want to be able to rely on it. I think one of the biggest challenges I've seen within this reporting space is when people don't trust the information. As I've said in the past, and I think it is around sort of good reporting is about providing advice, right? And that's really a really good line to sort of bring up here, which is to say, well, is it providing good advice? And good advice is accurate, and good advice is relying on data. And if you can't rely on data, then that's going to be an issue. And if it is reconciled, are we creating a lake or a data lake or some version of that where it's all pushed into one area, and then we can push out financial data as well? That's the other thing. Like, what stakeholders can dip into it? The board, can the finance department, can the property business, can all these sorts of different things. So that's when another aspect of the reporting piece. And then we think about the costs. How much is this costing us? Time and money. Because the backfill some of these things. If you've got 20 years worth of data and you say you want to put all this from Excel that might have been adjusted and touched and, not manipulated, but you know what I mean, like made really specific to the individual that was managing at the time. And we're going to push that all into a platform, and then we're going to press a button all of a sudden, it's going to just be magically, perfectly reconciled. No, that backfill is a real punish sometimes. So you got to really think about that. And then you go, when it comes to the AI piece, are we using ours or are we using someone else's, right? And when I say the AI piece, I mean the visualization piece, the natural language interrogation piece. Are we using theirs or are we using ours? Because, there's a lot of talk around at the moment around shadow AI and things like that. It's like everyone's using it. We're not sure who's using what and where is it going. So seeing a lot of use cases, and this is what it all comes down to at the moment, right? Which is there's a question from a lot of people around, we have this ability to interrogate things in natural language within our AI instance, our AI platform, why do we need to go outside? It's a good question, because on the face of it, it looks like it should be a natural sort of progression, right? Which is to say, well, we've got it on Excel and we reconciled it on Excel. If we push that data into our AI platform and then we just say, well, what's the IRR for this particular asset? Can you give us an overview of the money and invested capital and the DPI for this part of the portfolio, or whatever it ends up being? That's a really powerful and easy decision for a lot of people to make. Now, you got to make sure that the number one North Star is always don't let convenience eat privacy for breakfast, right? I think it was Edward Marshall that mentioned that in one of his reports, and I'll include that in the show notes if I can find it. But that's I love that term, because what that means is we're seeing a lot of family offices dip their toes or jump in with both feet, to be perfectly honest, into the AI space and say, this is now the tool we're using for everything. And you've got to be really, really careful. And we'll go through the things that we need to think about before we even start to build out something. So what's the current options? Because no one's not using AI, right? So what's some versions that we look for here? So what can we do? One, you can use an off-the-shelf solution. And there are a number of them, and a number of them are used by my clients, and I have installed them before as well. They are the big platforms where you're putting your data into them, or you're setting up the data feeds for them, and they're the engine, right? They're off the shelf. You are a client of theirs, right? And they've been around for a while, and they're a lot of the time institutional grade. They're sometimes very well funded. And importantly, from my perspective all the time, is they're used by firms that have a heavy compliance burden, like wealth managers and things like that. So they have to be at a certain level. Now, we got to also temper the fact with that those are not going to be at the bleeding edge of where we're at the moment. But I don't think that's such a bad thing. I think one of the good things about the off-the-shelf sturdy, platforms that have been around for a while is that we can hopefully move with them. And as they become more, I guess they embed these AI tools more, we can rely on them to do the DD. We can rely on them to make sure that they're not getting ahead of their skis in terms of data management and things like that. But having said that, they are still going to be a little bit behind. And honestly, they are quite expensive. So again, it goes back to that point a lot of principals make, which is, hang on, why are we paying for this? Can we not do this ourselves? And this is where we have to start thinking a little bit more deeply. Another alternative is use Excel and then buy or use a visual overlay. What used to be Power BI, I guess, is being a little bit taken over by the visuals that come out of Claude and things like that. And so it does kind of it is an attractive concept, right? Which is saying we already have the Excel data. We're reconciling that. We're reconciling that against finance as well. So why don't we just push that in and then use AI to interrogate it? And I got to say, it does. But also, then you're relying on the AI instance or the AI solution to be accurate, right? You've gone from a reconciled piece to something that is a little black box-y, right? So who's reconciling the data that's coming out of the AI platform? I don't know. These are all good questions, right? So you're having to you can decide to do that, but you'd have to eat the fact that AI makes mistakes. It says at the bottom of the thing when you plug it in, it says AI makes mistakes. There's all sorts of hallucinations. The numbers might be wrong. I mean, having said that, we're not using this a lot of the time for portfolio management. We're using it for investment book or record, but it's still the same thing. We're still looking for accurate, reconciled data. So, when you look at these overlay platforms that are coming out and say, we can visualize everything, you got to go, all right, but now I've got to trust that to be accurate, right? So you have to maintain that data manually in the Excel and then it's visualized. So it's almost, if you're choosing to do it that way, you're kind of going back. It's just a better version of the Excel piece. You're still relying on someone to manually enter into Excel. You're still relying on someone to manually reconcile that information. You're not getting data feeds from your private bank into Excel. You know what I mean? So it is creating this, again, very hyper-customized version. It's just creating better visuals. Maybe that's a good thing. Maybe that's enough. I don't know. It depends what the client is looking for. But I think it's something to interrogate before you do anything in this space. And I think this is what we're doing more and more of at the moment, which is, yeah, that sounds like a good idea, but let's dig into what the implications are downstream and what are going to be some of the issues, right? And that's going to be, I think, the ongoing discussion here. And one of the things we want to avoid is just jumping in, but we also want to avoid just analysis paralysis as well. So I think what we'll find is there's some version of a hybrid in there, which is we might be able to get those companies that are very heavily compliance, like have heavy compliance requirements and things like that, but are starting to come to us a little bit in terms of saying, well, you don't necessarily need to upload everything. We can start to visualize over the top of your incumbent data sets. And I guess that brings up the other question too, right? Which is, are people going to start making their own data lakes? And I've spoken to a couple of firms recently, and what they do is they come in and they look at your entire office and say, this is where we see all the data being used, manual data, all this upload and things like that. And then this is a way that we can create this lake of information, and you can plug into it or you can pull data out of it. So again, maybe that's the third version, right? So where are these decisions going to be made? What's going to be the inflection point around this? Well, we have to trust others with our data, or we have to trust the fact that we can manage our own data sets completely and reconcile. And I don't know if either one of those is the perfect solution, but you kind of have to make that decision. If we do it ourselves off our own data and we interrogate it through our AI instance, and then we're going to make sure we're managing our data correctly. So I think maybe that's going to be the iterative version. Or do we push it into someone else's system and make that automated and make that, reduce all that manual componentry? So that's going to be one of the bigger ones. And what we're finding, honestly, is that offices are using inexpensive, low sophistication. And when I say sophistication, it's mostly because they're very retail oriented, because they can be platforms which will gather data, which we can get our transfer of information into. But, that's the sort of things that we will look at. The other thing that we're starting to see, and this is a decision that's sort of coming in as well now, which is we outsource the AI build to other firms. In the recent sort of newsletter, what I did was I put it out to everyone saying, we're starting to get a request for consultants or advice firms that are specifically there to make a map or to do gap analysis and to help people create a family office that is using the AI tools. Because at the moment, we're kind of getting a lot of people go, well, yeah, no, we're starting to look through Claude and ChatGPT and stuff like that. And we're going, well, how about we just get someone in that can show us all these things that we're doing manually or we're doing, in a very potentially key person risk perspective that can be automated. So maybe that's what it is. Maybe that's going to be the catalyst, which is we can do all this. You can still manage your own data, but we've got all these tools that can remove some of that manual reconciliation or, whatever that looks like. And I think maybe that's where it's heading towards, which is we're getting specialists that can give us a diagnostic almost, right? The other thing to think about now is, how long this is going to be, because it seems to be moving so quickly. And I think there's something to be said for being able to offload a lot of this to an incumbent platform. So if you're using a really good, good sophisticated platform, it should be them that's at the bleeding edge of this, not necessarily the office, right? Or the advisors, not necessarily the office. It's going to be really difficult to keep up with this. So I'm finding, and I think this is sort of part of the whole road model, which is this is why I have these conversations with people. This is why I have these conversations with other firms, because it's just it moves so quickly. So we just have to keep making sure that the partnerships that we have are on top of this, because we're not going to be, and the officers aren't going to be. But we need to be able to tap into that expertise when we get it. The other thing to really consider is how much of this you're pushing onto your staff. People with jobs, people that are actually going to still have to do things. It's like, no, your new project is to figure out how we can embed Claude or, you name it, into the office. That's your job now. And you're like, oh God, okay, well, where do I start with that? And do I, mess around with this? And do I do tutorials here? Or, do we, like we do a lot of the time, which is to sort of get someone that's purely focused on that? And that tends to be the whole road sort of mentality, which is we're trying to get specialists to remove the uncertainty, to remove the wasting of time, and to make sure that the governance is the bedrock for this. Like, it's the amount of data going in and out and going into other platforms, and all this sort of stuff is quite concerning. So I would say having someone go, right, and this can be at the cybersecurity managed IT level, or it can be those specialist firms that are coming in and say, well, this is where your leakage is on the data side. This is where you can improve. This is the tools that we can use. These are the ones that we wouldn't use. All this. It's the same way you get investment advice, or the same way that you get advice on anything. It's the structure, and it goes towards that scaffolding piece as well. So in conclusion, if you're there going, do you know what? I'm just going to use my AI instance, and I'm going to forget about trying to figure out where the data has been reconciled or where it's going, things like that, then I would say stop. And I would say think about the reasons that you're doing it, and go back to that whole point, which is going to be, there is a good way of taking advantage of these new tools that are coming through, but it's always got to be it's got to have a governance lens to it. I can't stress that enough. Anyway, if you're interested in learning more about it, and maybe even understanding some of the firms that I've been talking to, because it's been pretty cool, actually. I've really enjoyed it. So please reach out, Shaun@wholroad.com.au. If you're enjoying the podcast, please ding the alert bell, and you'll get a notification when the next one comes in. If you're interested in anything else, just go to thefamilyofficeSherpa.com. Until next time, thanks for listening.